The $1 Million Margin Club presents the Candlestick Pattern Playbook, Volume 2 of the Day Trading Series, part of their growing library of books by professional traders to both educate and entertain. This book, which you can purchase using the link below, is part of a new learning series which is intended to show one of the most important tools for any trader, the candlestick chart and the patterns that form. During the video, you may adjust the playback so it best enhances your enjoyment of the book. The educational journey starts with the history of candlesticks and candlestick patterns, which were created in the 17th century by a Japanese rice farmer. Candlestick patterns can be found in any time frame, such as day, hour, 15, 5, and 1 minute. Before day trading became mainstreamed, candlestick patterns were looked for in the daily time frame for investment signals. With the interest in day trading and in turn scalping, the patterns began to be looked for in the intraday time frames. The pages to follow have descriptions of candlestick patterns, idealized and actual examples, plus ratings for accuracy. Here are the bullish Marubozu, bearish Marubozu, hanging man, hammer, and shooting star candlesticks. These candles, especially the hanging man, hammer, and shooting star, offer quick signals for trading with strategies such as the range-bound strategy described in Day Trading Volume 1, which uses support and resistance lines to create channels for trading. The inverted hammer, doji, dragonfly, and gravestone candlesticks here are more quick signals for which way to trade. While the bullish engulfing candle, bear flag, bull flag, and the head and shoulders patterns signal both which way to trade more accurately and when to trade. The bull and bear flag patterns at 82% accuracy are some of the most popular patterns. The head and shoulders pattern is rare but found very accurate at 91%. The bull flag and bear flag even identify a built-in goal for profit-taking. The break of pre-market high, flat-top breakout, evening star, morning star, bearish harami, bullish harami, bearish tweezer, and bullish tweezer candlestick patterns are shown with idealized examples. The bearish tweezer and bullish tweezer at 68% accuracy are extremely common and easy to identify. The bearish tweezer with matching highs of a bullish and bearish candle appearing at the top of an uptrend, and the bullish tweezer with matching lows of a bearish and bullish candle appearing at the bottom of a downtrend. 3 white soldiers, 3 black crows, dark cloud cover, bearish and bullish mat hold, rising 3, falling 3, and ladder top candlestick patterns are more multi-candlestick patterns that, when identified, can give strong signals as to the next move of the price action. The bearish mat hold and the bullish mat hold are differentiated from the rising and falling 3 candlestick patterns by the second candle gapping above the first candle, and are rated as more accurate, the bullish mat hold being 83.7%. The ladder bottom, bullish and bearish abandoned baby, and cup and handle candlestick patterns are the final candle patterns in this chapter. They are all rated quite accurate in signaling the direction of the next price movement. The next chapter shows samples of idealized candlestick patterns and their accuracy rating. Often, for a pattern that is signaling trade long, there is a mirrored one signaling trade short, such as the bearish and bullish hikake or bullish and bearish separating line candlestick patterns. The 3 inside up, 3 inside down, bearish and bullish 3-line strike, 3 outside down, 3 outside up, bearish and bullish belt hold, bullish and bearish doji star, homing pigeon, upside gap, 2 crows, bullish piercing line, bullish rickshaw man, bearish rickshaw man candlestick patterns are described with an example and rated for their accuracy in signaling future price action. The rickshaw man is a doji candle where the body is small and the wicks are long. Here, the bearish and bullish spinning top, taku-ri, 2 crows, identical 3 crows, matching low bullish and bearish tasuki, bullish and bearish harami cross, unique 3-river advanced block candlestick patterns are the final patterns discussed. Often 2 or more candlestick patterns can seem similar. Like the spinning top and the rickshaw man, the only difference is the size of the body of the candle. This chapter begins the testing of your pattern recognition through quizzes of actual candlestick charts and patterns. You may pause the video at any time and test your knowledge by taking the quizzes on these pages. All the candlestick patterns from the previous chapters are showcased here, some more often than others. Not every pattern in a chart has been listed. You will find additional patterns as you search and should take note of them. You may want to take the quizzes repeatedly until you can readily identify all the patterns listed. Remember, the patterns here are on a real chart and are not idealized examples of that pattern. The charts used for the quizzes are different time frames. Included are 1 minute, 5 minute, 15-minute intraday charts and daily charts. However, patterns can be identified on any chart time increments depending on your trading style. Each of the intraday charts shows most of an open session for a trading day and how the patterns would appear during those times, while the daily charts show several months of trading days. This gives a variety of examples of how patterns will appear on various time frames. At this point, you may have noticed that some of the multi-candlestick patterns contain other recognizable candlestick patterns. In some of the quizzes, you will find these patterns within patterns included in the list of patterns to be found for other quizzes. You may find some that were not listed. Again, take note of these additional patterns. These patterns within patterns can often provide signals for a continuation of the main pattern or a potential breakdown of that pattern. If you've been playing along and taken the quizzes, here is where you'll find the answers. Like any good quiz, the reward for completing the quiz and scoring well is new knowledge. But don't let that stop you from making it a game. Once you have completed the quiz, add new challenges. Challenge a friend and see who can find the most patterns, both listed and unlisted. See if you can call out the signal the pattern gives for trading. Is it a continuation or a reversal? Where would you enter a trade? As mentioned earlier, the charts are of various time frames. The time frame you prefer depends on your trading style. The daily time frame is often used when swing trading and for long-term investing. The intraday time frames are ideal for day trading and scalping, using various strategies such as the RV strategy found in the best-selling book Day Trading Volume 1. Patterns can also be important when trading the market open and using the watch list criteria found in the best-selling Trading Journal Logbook. By this point, you will have seen how there are patterns within patterns. This is even more evident here in the 15-minute charts, such as a bullish tweezer candlestick pattern that is in a bear flag pattern, or the bearish tweezer candlestick pattern that is in a bull flag pattern. You may also have noted groupings of single candlestick patterns such as doji's candlesticks next to hammer candlestick. This occurs often when a single candle at the bottom or top of a trend begins a consolidation period. These consolidation periods can often lead to a reversal, which is the signal of the first candle. Some consolidation periods will also turn into other patterns such as the flat top breakout or the cup and handle, which starts after a consolidation and ends in a retracement before it continues to an uptrend. So while most patterns are generally found at the top or bottom of a trend, it is a good idea to watch the single candle pattern that appeared during a consolidation. You may see a pattern form. Now comes a very useful tool, flashcards. The Candlestick Pattern Playbook has been designed with a unique set of pages that can be cut out and laminated to create flashcards for studying or for quick reference as reminders. All the patterns are represented here in their idealized example. Included are a description of the candlestick pattern, the signal to look for when trading, the potential trade to make, and the pattern type reversal, continuation, or breakout. When looking at these pages in the video, keep in mind that the page on the left is actually the back of the previous page, and the page on the right is the front of the next page to come, creating back-to-back images for the flashcard. For example, the top picture on page 133 is Doji Candlestick, which is described in detail at the top of page 134. With a copy of these flashcards in hand, you can study anywhere. You share the cards with your friends. You can keep them by your trading station as quick reference. Imagine being able to immediately call out a bearish harami candlestick pattern to know it is when a large bullish candlestick is followed by and engulfs a smaller bearish candlestick, a simple two-candle pattern that regularly indicates the reversal of a downtrend. Knowing the low of the bearish candlestick is a support, and that when the next candlestick breaks that support, it's a possible signal of a reversal. No move is 100%, but within this book are the ratings that tell you just how accurate the move is. Keep in mind these are idealized samples. Some of them are specific about the number of candles in the pattern, where and how they need to form. Some candlestick patterns, however, are not limited by the number of candles or where those candles appear. Patterns like the flat top breakout can form at the top of a trend or during a consolidation period and can be 3, 4 or more candles long. Patterns like the bull flag, which has a pole that is the uptrend and can consist of any number of candles. As you can see, this book has a lot to offer, from a history of candlestick patterns to how to recognize, interpret, and trade numerous candlestick patterns. Keep in mind that no pattern is 100% accurate. Some patterns are more common than others. Knowing the patterns helps traders with decision-making when exploring the accuracy of a candlestick pattern. It would be best to trade in a simulator until you have memorized most of these patterns. Feel free to replay the video and study the pages again. We thank you for taking the time to view the Candlestick Pattern Playbook. We hope you found it helpful. This has been a sample of one part of a growing library dedicated to expanding the knowledge of traders. We have included an invite to our authors page, the $1 Million Margin Club, with a link in the description below this video. Just click on Show More to expand the description and click on the link. Also, you will find links to review the books offered by the $1 Million Margin Club.